Diamond Bank has reported an after-tax loss of 703.4 million naira compared with 7 billion naira's pre-tax profit in the same period a year ago. The bank's gross earnings rose marginally by 1.9% to 68.3 billion naira from 67 billion naira previously. And we cross now to Lagos to chat to Abdulrahman Yinusa, who's CFO of Diamond Bank. Thanks so much, Abdulrahman, for joining us this afternoon. Well, as I say, we've got those 9-month numbers having been released for the 2011 period, and in line with expectations, the company reporting a loss after tax for the 9-month period. The bank really coming under pressure here. Let's run through some of the pressure points that have managed to exert itself over this quarter specifically.
Okay, morning, Alishia. I'm sure all viewers, if they've been following our story in Diamond Bank, way back in, I think, February, March, we had a change of management where we looked at quite a number of issues to expect in the new financial year. And we had indicated that there are legacy issues on the loan issues in terms of toxic assets. And we've indicated that there will be some cleanup in the course of this year. We give a rough number of about 30 billion, which is in course of being put together. And as we speak, if you look at the financials, you see that the core performance of the institution is very well in terms of our net operating profit before loan loss provision. So what you are seeing here is the impact of those provisions that we had already talked about at the beginning of the year.
Yeah.
So far, we've done about 20 billion of that figure. I want to tidy up the rest in the course of the financial year.
So where tidying up of that position becomes crucial at this point, Abdulrahman, run us through some of the measures that are currently being employed to enhance your position.
Okay, the first thing we've done is to disinvest from all of the subsidiaries that are non-bank related. So by the end of this financial year, the Diamond Group will consist of only the commercial bank arm and maybe the one you call the custodian in terms of custodian business. But fundamentally speaking, once you take out the loss-making subsidiaries out of the group, then you begin to see some uptake on that. And beyond that, we're also looking at the issue of the loan loss provision to put that behind us and begin to run the business, as usual. We have a very strong retail business, and the earnings on that side is also beginning to look very good.
Of course, it's one thing putting the issue behind you, another thing sustaining that position moving forward. So let's run through some of the measures you're employing to get a handle on your loan book specifically, Abdulrahman, because we've still had net loans expanding by 9% quarter on quarter. Year to date, we've seen growth filter through of 29.2%. Are you anticipating to see any reining back of loan being granted out to the market?
Well, I think quite to the contrary. What we've done is to take advantage of the AMCON window to dispose of as much of the toxic asset as we can, such that by the end of this financial year, we're actually looking to close anywhere around the 5% magic number that Central Bank has given as a guideline. So once we've been able to achieve that, there will be no need to actually rein in the issue of risk management, risk assets. What we actually need to do is to now begin on a fresh platform to begin to give new loans, but this time around, maybe to the top tier corporate where you are very much more secured, and then to do a little bit of diversification along the retail market area.
Let's take a look at that, because like you say, it's the quality of lender then that becomes a critical point here. So you're talking about diversification, you're talking about exposure to a top tier client as well. In terms of things on a sector basis in the corporate arena, are there specific focus points within that space as well?
Well, I'm sure you do know that in the Nigerian environment, the oil and gas is the top dog in there. And what we've done is to have a re-entry, because in the past we've had our legal lending limit very, very tiny. Maximum of about 5 billion naira is what we could lend, but we've gone back to revise that, and we've gone to the maximum, which is somewhere about 20 billion. So now we can play a lot more in the top tier corporate. So if you look at the top names either in the manufacturing or top names either in oil and gas, we're now able to do a bit more in that direction. And because the risk is much lower, then we have a little bit of comfort. And then when you go back into even the retail area, what you do in retail area is that you give out very, very small loans, 10, 20 million, but it's over a very wide number of customers, and therefore the concentration risk is very minimal.
Let's take a look at income derived from non-interest avenues of the business. What stride are you seeing being made in that regard?
Fine. Again, when you look at the retail business that we're doing, that is the That is the interesting part of our business. We're able to do a lot of retail loans, and we're also able to do a lot of retail transactions from the card business. And these are things that bring in what you may call annuity income on a day-to-day basis and as we go along. So we're actually very comfortable with our earnings from non-interest portion. And in fact, the target is to be able to have non-interest income being able to match our operating expenses such that our net revenue from funds at the top line can then go down to the bottom line as our profit before tax.
So what's your outlook on earnings as we venture now into the fourth quarter and, before we see this year wrap up?
Okay, I mean, for us, our last quarter of every year has actually been a very strong one traditionally, and we begin to see a lot of transactions that we've been pushing through in the course of the year, come to fruition. If you look at our top line, net operating profit is already about 20 billion, which of course is higher than what we've had, in the last financial year. So we look at this last quarter to be able to bring in another maybe 10 billion to be able to at least close the year with something very strong in that direction.